Benjamin Franklin once stated that there are only two things that are certain in life: death and taxes. Taxes are always going to be around and required by the government. Accountants are the people who handle these taxes for everyone. Ethics is a theme that will appear with any action or decision that a person must make. There is usually a right or wrong choice in most decision-making processes. Ethics has a very large role in the accounting field. Accountants can either handle taxes for individuals or for large corporations, and if they so choose, they can limit these taxes and use other illegal techniques to save a corporation a vast amount of money. As a future investor, either playing the stock market or investing through a bank for a retirement fund, these accounting scandals can impact your life and savings in a major way. Luca Pacioli is commonly known as the father of accounting. Throughout his lifetime, Pacioli studied the basics of accounting, and he himself developed the rules and regulations behind bookkeeping, which is the process of recording all transactions in the general ledger, which contains all the information that is recorded by the bookkeeper. These rules were the first sign in ethics in accounting. He had spotted different ways that an accountant could beat the system, and he wrote a code of ethics about what and what not to do as an accountant. Today, there is an International Federation of Accountants, and they publish a handbook for the Code of Ethics in Accounting. There are also rules to guide accounting practices that are developed by the Financial Accounting Standards Board. As stated earlier, accountants play a very important role in large corporations. Accountants, mainly certified public accountants, or CPAs, are in charge of handling the financial reports for a large company. These accountants put together the report themselves based on data and transactions received throughout the year. These reports can be manipulated to help a company lessen their taxes or to make this company look better and more accomplished than they actually are. These may seem like very small issues, but they affect a very large number of people. If an accountant was to manipulate the financial statement and make it look like the company has a significantly larger net income than they actually had, this could be horrible for stock investors. Say you invested your money into this company who manipulated their net income. This would have a huge effect on you. Because their net income isn't actually as high as they stated, they will have little to no dividends given back to the stakeholders. This means you are virtually throwing away all of your money that you invested in this business, and that could possibly be a large sum of money. Ethics can potentially be very controversial. Some people see certain activities as wrong, while others would not believe them bad at all. Accountants have an ethics system, which is a set of laws that they must abide by. There is much risk when an accountant and a company try to beat the system, but there is also much reward. An accountant can make a lot of extra money in the form of bonuses or off-the-record money, but they could also go to jail for an extremely long time. On the other side, if a CEO approaches an accountant and asks him or her to help manipulate the financial statements, this accountant could be afraid to say no for fear of losing their job. Throughout history, there have been many different accounting scandals that have affected millions of people. One of the worst accounting scandals involved a Houston-based waste management company. This company reported $1.7 billion in fake earnings. They did this by increasing the time for depreciation, which would make all their assets seem a lot more valuable than they really were. Seeing earnings like this probably reeled in all the investors and all of their money. Unfortunately, as these investors would come to find because they lost all their money, these were fake earnings. There was a shareholder class action lawsuit when the new management figured out what was occurring. This allowed the people to get their investments back, but this would not have happened if they had not been caught. This was also the case with the large Lehman Brothers scandal in 2008. There are probably many different organizations right now that are cheating the system, and even more people who are unknowingly investing in these companies who are basically taking all their money. Accountants have the decision to either go with the legal actions or deny the opportunity to cheat millions of people. Most choose the good and legal actions, but there are some who would choose to get rich quick. In conclusion, you must always be careful with your money and really know who or what you are dealing with when investing.